Record. All right. Sorry about that. So when I'm thinking about a stop loss, what I'm thinking about is what is a stop loss, right? Stop loss is something that I'm putting in place to stop my losses, right? So when I'm looking at that, I'm looking at my stop loss from an overall account perspective. And I'm gonna explain why. And this is going into why I always talk about how I don't use, typically, I'm not using, because of how I trade, I'm not always using like a set percentage per trade for a stop loss. Because overall, that's going to depend on the actual position size you took. So the only thing to me that logically makes sense, if you're going to say my stop loss is 25% across the board, my stop loss is 30%, 15%. The only way that's logical to me is if you're taking the same position size on every trade, right? So if you're taking a $100 position size on every trade and your stop loss is 25% on every trade, then in essence, you're risking $25 on every trade, right? But if your stop loss is just, my stop loss is 20% on every trade, bro, and one trade is $500, one trade you take is $1,000, one trade you take is $100, then in reality, your stop loss are all over the place. One trade, you putting up $100 that you're risking. One trade, you're risking 50. One trade, you're risking 200, right? So if you're really trying to control how much money you're risking, then having a percentage-based stop loss purely for the sake of that, but not having it also be correlated to a position sizing rule, to me is ineffective. And again, like when I use the example to explain it, if you're trading a $1,000 account and you know you don't want to lose more than 10% on a trade, or 10% of your account per trade, or even per day rather, if you take all 1,000 of those dollars and put them on one trade, then you have a 10% stop loss, which people would say, I have a 10% stop loss, right? That's fine, right? That's the way that you're losing $100 if you lose. On the flip side, if you take a trade that's a $100 trade out of your $1,000 and you're using a 10% account stop loss, then you have that whole trade can go to zero, and your risk compared to your actual account is the exact same, right? And so that's the difference when people are talking about, I'm getting stopped out of trades too early. Yo, bro, I got in the trade and I had my stop loss, my percentage stop loss, but then it flipped on me after I got out. It ran up, right? That's the difference. If you're taking that 10% rule again and you're trading that whole account on one trade, then you only have 10% of wiggle room. That 10% of wiggle room can get lost in consolidation. 10% of wiggle room can go down when you just have a one wick, on a 1 minute chart or 5 minute. One wick can take you out if your stop loss is 10%, and that's just because you have a 10% stop loss on the trade, right? But if you traded that out of that $1,000 account, if you drop it down and you're trading $100 account sizes, and you're not gonna let the trade go to zero, obviously, right? Then in essence, you're keeping a minimized risk compared to that. So the other side of it is, well, Jordan, my reward is then capped, because if I'm putting up $1,000, then I have a greater chance to get more money. But my risk is just gonna be 10%, and I might get stopped out. All right, so that's where you gotta start looking at from a logical standpoint. Is it more important to protect the money you have and trade another day, or is it more important to go all out and see how fast can I make the most amount of money possible? Right? Which leads to you. So you don't want to be trading through greed. You don't want to trade through fear, but you want to trade strategically and logically. So what I like to do is trade, and this is why I trade off of price stops, and I don't trade off of percentages of the actual trade. And my position sizing will vary based on the trade I'm getting in and why I'm getting in the trade, whether it's a day trade, whether it's a swing trade, whether it's I'm trading off the 1 minute chart. Even on the 1 minute, am I trading the anticipation of a breakout or a breakdown, or am I trading the actual breakout or breakdown? Because if I'm trading the anticipation of a breakdown, then I'll have a much tighter stop, because I'm entering, if I think it's going to break a trend line to the bottom or break out of if I think it's going to break down through a descending triangle pattern, and I get in when it's at the top of that trend line, then my stop loss is going to be much tighter, because it's going to make a new high I can get out just like that. Versus if I'm buying in on the actual break and it comes back into that pattern and retest anything, 5%, 10% stop loss, I'm probably getting right. So that's why I don't do that. But of course, you'll personally develop your own rules. So somebody in the Zoom that we're on in my group chat just said, as a good risk management, they never use more than 10% of their account on any given trade, right? So that way, one, you're not emotionally attached to that as much. If something and that trade goes down 50%, that's only 5% of your account. So in the big scheme of things, you're not really hurting like that. But if you're trading half of your account, that's when you start freaking out. So rule of thumb for those who haven't been setting stop losses or take profits, if at any point you start having any type of emotional worry, sell it. I mean, I'm not financial advice. This is not financial advice, but at that point, you're no longer thinking with your head. You're no longer looking at the chart and saying, okay, what makes sense? You're saying, how do I feel? And the market don't move off your feelings, bro. So you need to say, what makes sense? Okay, does this look like it's still going down? And that's my other rule, right? When I'm trading, I'll get out, and that's why I trade off a price, is I'm getting out once the market shows me that my reason for entry is no longer valid, right? So if I'm in a swing trade and I think that the stock is going to go from 100 to 105 and the stock is sitting at 100 2 days in a row, if the stock's sitting at 100 2 days in a row, I'm not tripping because it's still looking like it's going to make that move, right? There's nothing showing me that my analysis is invalid. So why would I sell it? Is my viewpoint. And that's going to change based on if you're trading options, if you're trading stocks, and trading shares. And then the other aspect is when you're not trading a too big, you are trading a huge account. 3 days, you get up, right? So that's knocking into your contract, and then you are gonna have to go ahead and close it because you want to preserve your capital. But one of the things that's helped me as a trader, especially as a day trader, especially as somebody who trades and then takes that money and lives my life off of the trading money, is focusing on preserving my capital more than I focus on getting a return on my capital. So I'm not really chasing ROI anymore, as much as I'm focused on how can I make sure I don't lose any money, right? And I don't mind, my account only going up 5% a week. It doesn't, but I don't mind if I only gain 5% a week, 10% a week, because over time that's gonna stack, right? What I don't want to happen is get into the habit of losing 10% of my account week after week after week, right? So when you're trading, if you're in the group, one of the things that you see ROI is return on investment. That means, after you make that investment, what are you getting back, right? And that's somebody asked in the Zoom. So what you'll see me talk about all the time in my Discord is, and that's something I got from Zay, kind of drilled it in my head, was don't let a green trade go red, right? That's something that I knew about, but until I started living off of trading, it didn't really matter that much to me. But essentially, when you think about it in the real world, if you got somebody that give you $100 and you up, say y'all betting on rock, paper, scissors, it don't matter. You up. There's no reason you should be leaving with less than $100, but really you shouldn't be leaving with less than 50, right? So you go up 100, say y'all betting 10 every game. All right, you made 100 and say they knocked you all the way back down to 50. I'm not about to keep going down so I could potentially go to zero, right? There's no reason I should be leaving without money once I've made money. So again, the way you want to think about it is, how do I make sure that I'm securing my bag regardless, right? So I talk about trailing stops. A trailing stop is when you're moving your stop loss as your percentage of profit increases. So what I say over and over and over and over again in my group is, once I go up 10%, and if I call something out, once it's up 10%, that stop loss is automatically put at 0 or at 1% if you just want to feel good, right? So once we're up 10% on a trade, there's no way that you're going to lose on that trade, because we're automatically setting a stop market order at the entry price, so that if the stock goes back down, if the premium of that contract goes back down to where we entered at, we're getting pulled out at 0%. Cool. I'm not tripping on 0%, right? I didn't lose any money. I didn't make any money, but I didn't lose any money. Could set it at 5%. You know, once you go up 10%, hey, I'm setting a stop order so that automatically, regardless if it drops back down, I'm getting pulled out 5% profit, right? And that can also do some good things for your mentality because you're winning. And as you continue to win, you continue to build your confidence and you can make moves more effectively and more confidently. So when it comes to that, that's kind of my rule I usually stick to. If I am going to do a trailing stop loss, I'm looking at, so once I go up 30% on the trade, right? Now I'm moving my stop up to 10%. I mean, to 20%, sorry. So worst case scenario, I'm out eating lunch with somebody, I'm out at the pool, I'm doing whatever. If stock drops back down, the contract drops back down for whatever reason, I'm getting pulled out with 20% profit. And I don't have to look at it because I set that stop market order, right? So stop orders are going to be different from brokerage to brokerage. I'm not going to get into detail about how to set up a stop order on any particular brokerage because there's too many brokerages and I don't use all the brokerages in the world. So I don't know all the brokerages in the world. I don't know how to tell you how to use all the brokerages in the world. What I'll say is look up how to use that brokerage for stop orders, right? So look that up. And I would encourage you to do that regardless of what brokerage you're using is look up 2 to 3 videos on how to use that brokerage. You know, it's certain, it's a lot of stuff on your brokerage that they might have that you don't even know is out there. You know, different types of orders, all type of things on that brokerage. So do your research on the brokerage that you're using, and then you can figure out what to use. Somebody asked on the, they said just do Webull. I use Tastyworks and I use Webull for my trading. Tastyworks, Webull, all right, that's me. But again, keep that mentality, right? So if you're actively trading, and you can look at the stock, then I say, well, you can use the price. And again, because you can have consolidation periods that eat into your contract. But if you're looking at the price might be valid. And we've seen that a couple of times where I'm sending in or I'm live trading or sending in what I'm trading in the chat. And I'm trading a breakdown on something. And then we go into consolidation and they said, why not trade your whole account if you can use stop losses and trailing stops? Let's get real with it. So I'm gonna keep it a buck with y'all. I don't trade your whole account or anything. Don't. All right. I have in the past traded, I have in the past traded 80% of my account on some trades. Right, and that's a pretty large account order. But that is with a trailing stop. So I will use a hard stop percentage based, but I also trade off the 1 minute chart. Right, so I'm looking at almost the closest thing I can get to like a price entry as possible. And so that's something that I don't recommend anybody do. But since somebody asked the question on the live, I'm going to answer it. I do trade heavily sometimes, but that's that. So again, you want to manage your risk. You don't want to get into the habit of trading large percentages of your account, especially if you're doing something day to day. I do with my day what I want to do with my day, right? So if I was like still working a 9 to 5, or if I was still in school, or if I was raising some kids or something, none of which I am, then I wouldn't be trading a large portion of my account on one trade. Because if little Timmy Jimmy over there spills something, I go clean it up. And then the stock that I'm in drops, now half my account or 80% of my account is down, 20%. And you don't want to lose 30% of your account in a day or whatever the math is on that side. So just from me, Jordan, to you, right? Don't trade a large, ridiculous portion. I would say never really put more than 25% of your account on the trade. Not financial advice, just my opinion. However, if you have developed the skill and have the consistent results and have the discipline and the mentality to do so, I know a guy who will put a large amount of his account on trade sometimes, but that's trading off of a 1 minute chart with it pulled up right in front of his face, and that's what he's looking at, right? And there is a tight stop loss on these trades. So there we go. And somebody put on the live, if you're asking questions on the live, hop in the group. Yep, the group chat link is in my bio. It does cost to be in the group getting the signals, but the education is completely free because my main point of having all the businesses that I do is to educate y'all because it's too much money out there for y'all not to be getting. So Moving on. We're going to swing over from the stop losses back to strategic trading. All right. So when you're trading off a strategy, that's looking like back tests. That's looking like stacking indicators in your favor. That's looking like not just indicators to say RSI, Bollinger Band, MACD, although it could very literally be that, but also like we just looked at earlier in the Zoom, we looked at the technicals on the stock, we looked at indicators on the stock, we looked at the options orders that were placed for the stock. Right? You can look at seasonality for the stock. So know that stock Apple, right? Let's just say Apple. If we know Apple, for example, the stock that has really Tesla. I think June Tesla finishes positive 83% of the time. I fact checking on that, but I think I was doing some research and I saw that June, regardless, June is Tesla's usually like his best month to finish positive. I didn't look at it in terms of ROI, but just positive, June is Tesla's best month. So if we're looking at buying Tesla and we're swinging Tesla and it's the beginning, I already know Tesla usually finishes positive in June. Cool, right? I go look at the chart and I see that Tesla is on a pullback in the uptrend. Okay, now I know that price action wise, Tesla looks pretty decent. Okay, 2, if I go look at the MACD, the Bollinger Band, the RSI, the volume, whatever, right? Tons of indicators out there, but you can start stacking those things up and you can say, okay, the MACD is crossing bullish, the RSI is coming out from oversold and headed towards overbought. So we're looking at these different indicators that's picking up and showing us that this, you just want to stack it. You want to stack the odds in your favor, right? So when you're also looking at the indicators, and I say this because it's easy to kind of get caught up in it, you want to have indicators that work together but aren't the same thing, right? So if you're using the RSI and Cutler's RSI and the stochastic RSI and slow stochastics, like those all do the same thing, right? They all do it, but they all kind of give you the information a little bit different way. But you will want to kind of spread it out where you have something like a Keltner channel or a Bollinger Band that's going to give you a range to look at. You can do something like the RSI, which is going to show you, that overbought, oversold, right? You can do something with the MACD that's going to show you those moving averages and looking at those things as well. So you can look at volume and look at, we have an increased volume that's, we're having more buying volume than normal and we're having a higher volume than average. So that's what I would say you want to look at when you're looking strategically, though. Backtest strategies, record your trades. And the biggest reason I say record your trades and why recording trades was a game changer for me, especially when I was swing trading, but always, is because one, when you record them and you make it public, you have a crazy amount of accountability. And not just me, because I own a trading business and I got a group chat where people are looking at exactly what I'm doing. And so I have to perform and I have to be smart about what I'm doing because that directly impacts tons of people, right? But for you as an individual, if you and your friend trade or if you and anybody in the group trades, somebody put in the chat, June and November is seasonal for Tesla, boom. So you can have somebody who's looking at what you're doing and they can, just like any other goal or something you have a workout partner, you have a life partner, whatever, they can hold you accountable to your strategy. Hey, bro, my strategy is to swing trade stocks that are oversold on the RSI with a 30, showing 30 on the RSI that are in the uptrend, given by the 200-day moving average being below the stock price, right? So if you trade something that's not that, they can hold you accountable and say, bro, that's not your strategy. Or, hey, bro, I'm about to buy Alibaba. Does that fit your strategy? No, but I just kind of thinking that maybe Alibaba, is there a strategic reason why? No, I'm just kind of hoping that, then don't take the trade, right? So you can save yourself by having an accountability partner, making your trade log public. You can have different people looking at it, and nobody wants to look bad in public, right? So you're going to be more aware, because when I'm taking a trade and putting it in my group chat, where there's over 14,000 people in the group chat, I know not only am I putting my money on this trade, but it's tons of people who are putting their money on this trade. And then if I lose, I got to look at the fact that not only did I lose, I lost some people's money. And I don't know what I'm doing. I mean, of course, everybody loses, but for me and for my trades, like we have to have a higher degree of probability. So we're not just taking random trades. We're not trading off of hope. There's no way that we're going to be trading off of hope and running a group chat where people are consistently profitable. There's no trade that you can be a way you can be a consistently profitable trader, trading off of hope, trading off of emotion, right? And so when you join our classes and we're sitting there and breaking down what we're doing, you're seeing the strategic approach we're taking to our trades, right? And we're going live on voice or on Zoom and you're looking at the chart or you're hearing us and seeing what we're talking about. That's the strategy, right? So you have to approach it the same way. Every trade you take, you should be able to break down exactly why you entered that trade, right? I got in FedEx calls at this strike, at this expiration. Why? You should be able to sit there and say, okay, I got in because it broke out of the ascending triangle pattern on the 5-minute chart. I got the strike that was one strike out of the money, and I'm using it as a day trade, which is why I got the weekly expiration. Or I got 2 weeks expiration. Why'd you do that? Oh, I got 2 weeks expiration because I think it's gonna make this move within the next 2 to 3 days, right? Do you say what you're getting in and out of on the paid chat, like live call? Yes. Yes, everything that we do, we give you the entry, we give an exit. We'll give information to why we get in it. A lot of times if we're here's an explanation and an entry and an exit and a trim level because we are actively trading it and trying to manage it on our accounts and trying to send it out in the group. But we do give entry and exit for everything that we do. So that y'all can follow along if y'all choose to follow along. But of course, this is not financial advice. We don't do that. So that being said, that's the biggest thing. When you start trading emotionally, and here's some ways, like I said, to know that you're doing something based off emotion, right? Screenshotting your stuff. If you're screenshotting your profit screen, it's probably time to close the trade. All right. If you're trying to screenshot and share with everybody, like, look, I'm up. Probably time to go ahead and close that, boss. Because at that point, you're starting to enter that mindset where you're just trying to see how high can it go so that you can have the nicest screenshot to show off. All right. Yes, we give entry and exit. Pop in the chat, bro. Links in the bio, pop in the chat, and you'll see. So that's one thing. Second thing is, again, if you enter a trade and you can explain for you, right, it needs to be a logical reason that can be carried over to another trade. So if I said I'm trading a bull flag breakout on Tesla, I'm buying out the money, or one strike out the money call with this week expiration, and you go and look at Caterpillar and you see a bull flag breakout on Caterpillar, you should say, hey, bro, it's a bull flag breakout on Caterpillar, and it's I'm about to buy one strike out the money call that expires this week. Cool, right? But if I'm saying I just got a Tesla calls because I hope it goes back up, I think it's gonna go back up, all right? Then at that point, hey, bro, I'm looking at Caterpillar. Do you think it's gonna go back up, right? So whatever your I think, and I think that's what happens with a lot of beginner traders is there's a lot of I think, I feel. Figure out how you can put that to words, right? How can you put into words why you think this is going to do what it's going to do? So if you think that SPY is going to go up, why do you think that? Well, when I'm looking at it, I know usually when it comes back down to the 400 level, it bounces back up. So that's why I think, okay, so you're trading support and resistance. Cool. All right. So you've identified a level of support and you've identified the demand area. Caterpillar is a stock. You identified a demand area, and now you're trading it out of that demand area, okay? So flip on the reverse side, where do you see it usually bouncing down off of? Oh, it usually bounces down if it hits 410 after it hits 400. Okay, so now you have a trading range, and you have a profit level that you can use, right? The other thing is going ahead and saying you're freaking out, right? So if you're freaking out about anything, you put too much money in. If you're freaking out about 30% down, you put too much money on that trade, right? If you get in a trade and you're constantly looking at the profit and loss, but nothing else, somebody put that in the chat and this, put that on Facebook, put that on a t-shirt. If you get in the trade and you're sitting there and all you're looking at is the profit and loss screen of the trade, but you're not looking at the actual trade itself, you put too much in the trade and you're trading just off of emotion. Put my phone on 20%. All right. So if you get in a trade and you're just looking at the numbers go up and down, up and down, up and down, up and down, and at that point you're trading off of greed. And then if it starts flipping, you're trading off of fear. Don't do that, right? FOMO, the fear of missing out. If you find yourself, and it's specifically something that I can say for our group directly, if you see that I entered a trade and 30 minutes later, I say, hey, y'all, 30%. Y'all can move y'all stop losses up to 20%, lock in profits. Don't let this go red on you. And you find yourself saying, hey, bro, it's up 30%. It's too late to get in. If you got to ask if it's too late, it probably is. There's always another day, bro. There's always another day. There's always more trades. There's always more stocks, right? So there's no reason to try to chase a trade that's already up. And it might keep going up, right? There's been trades the trade, and the trade is up 10%, and somebody say, hey, bro, I see you're up 10%. Should I still get in? I'd be like, bro, I probably wouldn't. It's about to test this resistance level. So if you get in right now and it goes back down to the entry price, I'll be getting out at break even. You'll be getting out with a loss, right? But if it breaks the resistance, then sure, why not, right? Because it's continuing the price. So we're not moving just off of percentages, because the percentages are going to vary based off of when you entered the trade. I get in the trade at 11 o'clock. Moody gets in the trade at 11:15. Zay gets in the trade at 11:30. If we're all trading the same thing, but we got in at different times, and we're all trading off of percentages, then everything's different. But if we're all it's going to hit a target of 415, and we're trading strategically, and we're looking at where we're going to get out, unless, of course, we're trading a certain percentage of the account size and we have a stop in place that's tied to that, right? But that's when you start honing your entries and honing your exits. So when you're looking at building your confidence, right? And when you start building your confidence more, when you build your confidence more, you're going to find yourself emotionally trading less, right? So let's talk about building confidence again. Trade log, looking over what's working. Biggest reason to have a trade log, in my eyes, is you could be trading multiple strategies. I trade multiple strategies. I have different rules for entries and exits. I have different rules for swing trades. I have different rules. I have different screeners I've run. So I got tons of different reasons why I might enter a trade. But if I log each trade with when I got it, when I sold it, what I bought, why I bought, what the price was that I bought it at, what I sold it for, if I log all of that and I say, oh man, my account's up 50%. Right? If you're in a group, you know how much one of my accounts grew last week and the week before, right? My account's doing numbers. Let's go look at why. What's contributing to this, right? Look at it strategically. And I can go in and say, oh man, I've been trading strategy A, strategy B, strategy C, strategy D, right? Strategy A, I only lost one trade. Strategy B, I lost 4 trades. Strategy C, I didn't lose any. Strategy D, I lost almost every trade. All right. When you log in them, you can easily see that. You can easily, that was going to be real bad. You can easily identify which trade or which strategies you want to drop, because strategy D is pulling you back. But if you're not looking at that and all you're looking at is, yo, I made money this week, you're going to continue to do the same things over and over again, not realizing that you would have made twice as much money with half of the losses if you cut 2 of those strategies you were using. All right, so you wouldn't be sitting there talking about, dang, bro, I went 50-50 this week, but I still made some money, when it's just one of your strategies that's been holding you back, right? Your strategy revolving around the RSI is losing, but the strategy using the Bollinger Band is winning. But you don't know that unless you're looking at that stuff. If you're tracking it, you're not going to know unless you're tracking it. So keeping a trade log helps you be able to keep in tune with that stuff, where you can see what's working for you, what's not working for you, and you can cut what isn't, and keep expanding on what is working for you. You can continue to maximize that stuff. You see that your RSI strategy is what's carrying your account, and your Bollinger Band strategy is holding you back. Okay, cool. Cut the Bollinger Band strategy, or make it better, but cut the Bollinger Band strategy. All right, cool. How do I have this RSI strategy that I improve? Do I add a moving average to it? Do I add, do I look at candlesticks more? Do I look at the entries of the candlesticks? Am I entering off of bearish candlesticks or bullish candlesticks? Right? Am I entering too soon? Am I entering too late? And that's, again, not looking at the price, but not looking at the percentage, but looking at the price and looking at the action of the stock. So the other thing to build your confidence and stop trading emotionally is to have more trading days. I was going to say trade more frequently. Honestly, trade more frequently, but not in the sense to trading. So we're trading frequently, but right? So trade your strategies more so you can learn more. You do experience, you want to have more data so you can gather the most data possible to make the most informed decision possible, right? So if you run a strategy over a period of a week, it might do really good. But if the market was having a strong week that week, it might not have been your strategy that just, that's a big boy. It might not have been your strategy that carried you. It might just been the fact that the market was just crazy bullish, bro. Right? But if you had that strategy and you tested over a month or over 3 months or over a half a year or over a whole year, right? Then you can take that information and say, okay, cool. Over this past year, we've had ups and downs. We had wars, we had COVID, we had whatever. And this strategy produced this result, all right? I can carry that over. Or I can make these tweaks and edits to make that strategy better and stronger, all right? How do I improve my exits? How do I improve my entries, all right? How do I improve what contracts I'm getting if you're trading contracts? So trade more often. And somebody on live said this guy is actually good. Thank you, bro. I appreciate it.
He's great.
Thanks, bro. Yeah, I just try, bro. I try to put people on. So trading more often, but trading strategically more often and learning from those things more often is how you improve. Don't just go to the gym and get up random shots. Go to the gym, shoot them free throws over and over and over again, and then figure out why you're missing, why you're making. Is it your form? Is it the routine? Is it your breathing pattern, right? Do you not think that these NBA players who have these crazy high free throw percentages, you think they don't go to the free throw line with the same exact breathing technique every time? Dribble, dribble. Like whatever it is, right? Like they have some sort of pattern that they're doing that they've taken down and figured out, this is what works best for me. That's why people have those different habits. That's why people, do those different things. So trade more frequently, log those trades, study those trades, learn from yourself, right? I go do that myself. I'm trading and I'll go look at it and say, okay, Jordan, what did you enter here? Man, so if you had waited this right there, but you enter wick, bro, if you waited till that candle closed, you would have had, a better entry, or you would have had, a better exit, or whatever the case is, right? That's why I started using price-based trailing stops. Is because before I might have used a hard stop as a percentage, but then I realized I'm getting stopped out. Okay, how do I prevent myself from getting stopped out? I'll stop worrying about the percentage. Okay, cool. My position's down 10%. So what? The stock's at the same price as that when I bought it. So nothing's showing me that this trade is bad. It's just down 10% right now because it's moving sideways. Okay, the breakout is still in effect, right? Boom, breakout happens, right? So that's something to think about as well. And that happened in the chat today. I say yesterday or the day before yesterday. I called out MasterCard call. I sent it to the group. I think I was down 8% or I was down 10% on something. I still sent it in and I said, hey, I'm down 10% on this. Y'all might get it at a discount, right? If I had a 10% stop loss because, 10% stop loss, I would have got taken out. And that trade went on and was a very profitable trade, right? Other thing to keep in mind when you're building your confidence is that you can always review and revise, right? So go look at what you did, go look at what went right, look at what went wrong, figure out how you can implement some tweaks to make it better, ask people for help, right? Gain confidence from coaches. If you take two people, one person has a coach, one doesn't have a coach, who's gonna be more confident? The person who's gotten coaching most of the time, assuming they put the amount of reps in, right? Now, if you got a coach and you haven't been using the coach, but buddy right here doesn't have a coach, but every day he put in 4 hours of work and he's studying himself and he's practicing and getting better, he gonna be way more confident. You're gonna be scared because you're like, dang, I got this coach, but it don't matter. Dang, I'm in this Discord group with all of these traders, but I'm not asking them no questions to get better. Dang, I'm in a Discord group that has classes every day, but you ain't getting better. That don't make no sense, bro. That don't make sense. Right? Especially when we're sitting here taking the time out and pouring into y'all. It don't make sense for you not to get better. There shouldn't be a way. There shouldn't be a way. Like I said in my little release, there shouldn't be a way you're in our server and you're not either making more money or you're not learning more things. Right? We're on the class right now. It's a Saturday. I'm at the pool. I could be in the pool chilling. What am I doing? Sitting here pouring in, right? So it's on you to take, whether you're on my live right now or you're on the Zoom, to take the initiative and go ahead and ask questions. We say, hey, we got live Q&A. Hey, we're running a live Zoom. Hey, we're running live voice chat. Oh, y'all, I'm at work right now. Is it recorded? Yes, we record all of them so you can go back and learn, right? So go watch the thing that we just recorded and then ask questions on it, right? Go on Google, go on YouTube, right? Go, like I said, I tell people in my chat all the time, people pay to be in my server. And yes, people have told me tons of times they leave other servers to come join ours. But I encourage people to go join other servers. Why? Oh, Jordan, but if they go find another server, are you worried that they're going to leave yours? No, because I know the value we provide. I ain't worried about that. And if you go find another server that's giving more value than what we got, I tell my people, tell me what's going on so I can turn up. Because ain't nobody about to be outdoing me, bro. So you have those resources available, right? So that's just going into the confidence piece. You're not going to have low confidence when you're continuously tapping in on resources, when you're continuously educating yourself, when you're continuously going in and studying what you're doing, when you're continuously getting the reps, right? Somebody who's only been trading for a month or somebody who's been trading for a year, it doesn't matter, because the person been trading for a month, but every day they're on the charts, they're on the Zooms, they're asking questions, they're researching when they get off of work, they're researching before they go to work, you know, on their lunch break at work, instead of sitting around talking about who's winning the finals. We're sitting here talking about, hey man, did you see Amazon's about to have a split on Monday? You know that usually when stocks like that have big splits, they go up by about 60% over the next year. I'm about to buy Amazon, bro. Let me do some more research into that, right? So when you do stuff like that, that's how you continue to build your confidence, right? Lock in, okay? So that time frame don't mean nothing, because you can do it. And it's something that Moody said he did before. Was he started trading, he was trading stocks during the day. Then he was taking the same stuff he learned when trading stocks. He hopped on crypto. Crypto's 24/7. So I can look at these chart patterns during the stocks. And I can go look at crypto when stock markets close, and I can see how I'm applying the same stuff to crypto. Oh, so that's a bull flag. Okay, it's happening right now. So I would buy right here. Oh man, that worked. Oh man, that didn't work. Okay, what could have happened differently? Okay, cool. Next thing you know, you trading crypto and you making money too, right? So continuously find ways to build your confidence with your trading. Continue to find ways to improve your trading strategy. You should have, whether you're trading certain stocks, whether you're trading certain strategies, every trade you take should have a clear entry point, a clear exit point, and you should be able to effectively communicate with anybody what your reason for getting these trades is, right? Whether it's support resistance, whether it's seasonality, whether it's options flow, whatever it is. Hey, I saw $2 million in Nike calls get bought yesterday. That's why I bought Nike, bro. That's it. I just saw $2 million fall into calls. That's why I got it. That's a reason, right?
Jordan,
and you can
I chime in real quick?
What's up, bro?
Can I chime in real quick?
Go ahead.
All right, so I just want to chime in when you was talking about I forget, I was breaking up, but you was talking about like 10% or being down 10% and you're not getting out the trade because it hasn't broke your setup and things of that nature. So perfect example for anybody that's on a call, the Oxy play that I put out, right? You can see people's FOMO, right? And I have to learn as well where I deal with other people's emotions and not let it affect me, which I haven't been, right? But I put out that Oxy play, and as it's going down, we had some percentage. I chose not to go ahead and trim like I normally trim and stop doing my strategy because I wanted to try something different, right? But I'm also looking at the setup, seeing that I got faked out, seeing that the setup was not messed up, got back into the setup, and I'll have a whole bunch of DMs and tags saying, hey, Moody, we average in now, right? We're gonna average in now. And it's just like, me, I don't like to average in on losers, but you also got to keep mind, we're trading sideways. And I'm also saying, hey, it's fighting a head and shoulders, right? So it has to break out of this head and shoulders, right? So you got to have a logical mind, like, why do you want to average in on a loser? And why do you want to average right now when you're losing? If anything, I'd rather average in. If I got, let's just say I got it at $20 and we're now at 0.10 a contract. I'd rather average in when I see it at 0.18. I don't care that I'm not the type of person that looks at it like the cup halfway empty. I look at it like the cup was almost full, but hey, look, now it's overflowing. At least I got the overflow. You know what I'm saying? So always try to remember what FOMO is too. And the reason I was explaining that way is because FOMO will kill your account, because anybody that averaged in the day before was up if you averaged in correctly, right? I didn't call an average in. But if you still averaged in, it just did like, I was too busy to try to teach, but it just didn't make sense when you have 2 days worth of data that's about to kill your contract and you know nothing that's going to happen in the chart. It's best to just average in on Monday. You know what I'm saying? This day's already over with. It kind of recovered a little bit. You're still down. There's no reason to average in and still see your contracts losing. Just let that loser be a loser right now. You still have time and just wait it out or trade another trade. I'm kind of heavy on it. So I'm not going to trade another trade because I understand that I'm going to get even more emotional because if I trade another trade, now I'm like, oh man, I got this bag over here that I'm waiting on, but I just got some money over here. I might end up cutting that one because I got some profits and it was some good profits. And I'm like, oh, I want to get out this trade already because I made enough profits on this one to kind of balance out my losses right there, right? And that's what you have to be proactive. You have to be 20 steps ahead. Like, what happens if I ask this person this question and they tell me this result? Well, hey, look, I know this answer, this answer, this answer. I don't know. I'm kind of rambling right there, but just be proactive, right? Be 2 steps ahead of whatever you want to do in life, right? And when I say that is if you want to trade and you just got into the group, the first thing you should be trying to do is 2 things. Well, 3 things. Well, no, 2 things. Education. It's not about, oh, how much money should I put in this account? What should I trade? Education. Because if you educate yourself, you'll learn, oh, well, let me not open up a Robinhood account unless I'm trying to buy shares or unless I'm trying to learn how to swing, right? Because that's that type of platform. You know what I'm saying? And you'll start to see that you'll answer your questions quicker than anything else, right? Or you can just ask the question like, hey, what's the best brokerage and things of that nature. But set yourself up for success. Don't set yourself up for failure. You know what I'm saying? It's just like when you wake up in the morning, you know damn well what the hell you want to do. And you know damn well what you're going to accomplish, right? Don't sit here and be, well, I'm going to take care of my children. I'm going to go do this and try to be Superman. The reason I say that is because you're going to feel defeated, right? Your subconscious mind is going to feel defeated for not completing those tasks. It's just like when you wake up in the morning and you make your bed. Do that. I promise you, start winning from the jump. That's what I mean by like set yourself up for success, right? Because the mind, it likes to creep up to success. If you ever notice, it's like you do good things. You, oh yeah, I did this. Oh dang, I failed on this. Oh, but I'm doing good here. I'm doing good here. Oh, I failed on this. So it's like you wake up in the morning, fix your bed. You know why? Because now you feel accomplished. You fixed your bed. It looks nice. When you kill everything that you do for the rest of the day and you come back home, guess what? Now you feel like a king or you feel like a queen because your bed's made. Everything is to standard to fit your mindset to make you feel prosperous, right? To make you feel, I don't know. I'm just trying to think of some stuff, but like, that's all you got to do. Just live on go. Just live on go. And it's not about, man. And if you don't have confidence, fuck that shit. Sorry, excuse my language. Forget it. If you don't got confidence, if you don't got motivation, you don't need it. What you need is consistency. Consistency. If you're like, what I like to tell people is consistency beats talent. You could be more talented than me, but if I'm consistent every single day, every other hour, guess what? I'm gonna blow past you. And it's not about blowing past you, it's about blowing past whoever I was yesterday, right? So that's what I like to tell people. It's all about consistency. If you put in the work, it's inevitable for it to happen for you. You know what I'm saying? I know people hear that a lot and it's just like, well, I didn't put in the work. I didn't put in the work. You know, last night before I fell asleep, I seen this gym video on Nipsey Hussle. And I was like, dang, he never spoke about this on no other video. But he was talking about how, you know, he was a gangbanger. He was in the street selling drugs and he stopped doing that for a period of time, right? And he locked in and he talked about having a pure heart and locked in and stood in the studio and kept grinding and making music over and over and over. He said, man, it got hard, right? He seen that a lot of people was messing with him, but then it got to a point where a lot of people weren't messing with him, right? His music wasn't hitting like that. He also was going low on funds because he's not out in the street and he's putting all his money into music, right? Then the feds raid him and he loses all his music and he's losing motivation. He said he still kept grinding, but he had to fight a case. So he went back to the street, right? The moral of the story is this. After he went back into the street, he put in so much work that a year later, he said, a year later, or maybe like a year and a half later, Epic Records contacted him and wanted to sign him off of his old work. He said, I haven't made a record since that day. You know what I'm saying? I haven't made another record. And I'm just like, nah, I don't want to get signed. I need money. So he kept hustling and they put a contract in his face. And he said, you know what hit me was my energy, was the fact that this was back pay. That's what it was. This was my manifestation of me putting in the work. And they're not asking for new product. They're asking for my old product, right? So karma's beautiful. The thing is, we have a perception of what the world wanted us to be like, right? Or the powers that be. So whenever you hear karma, you think about bad karma. You don't think about good karma. Who thinks about that? Anytime you hear karma, you think about bad karma. And that's because that's what the world tells us. That's because in our culture, we always talk about that, like, hey, don't be doing that. Karma's gonna come get you. Well, hey, you know what I'm gonna tell you? Keep doing that, young man. Keep blessing people. Keep pouring into people. You know what? Because karma's gonna catch up with you, right? Because that's how this universe that we live in, this planet Earth, don't care about all this yap, all that talk. It cares about true intentions. It cares about true intentions, right? So you just got to be pure and just put out your work. You know what I'm saying? Ask questions. Annoy people. Annoying somebody, it doesn't mean that it's bad. It just depends on what you're annoying that person for. Are you trying to get a benefit? You know what I'm saying? Trying to think of some more things to say, but I'm kind of saying the same thing over and over, just in different ways. And for people that are, much more older than I am, and you got children trying to learn this shit, learn this stuff, man, put them on. Even if they don't know about this, just turn off the YouTube channel one time and just throw on candlesticks. Make them ask you, Mom, what you watching? Dad, what you looking at? Yo, cuz, what you looking at? What is that? And just tell them what D-Wiz tells me all the time. The money's in the candlesticks. You don't ever want to work? The money right here. They just not going to show this side of the world, right? But yeah, just be a go-getter. Stop complaining. Stop saying, why me? You know what I'm saying? If you see yourself always, this is what I say. I remember when I used to complain all the time. And what I tell myself, because I grew out of that, is I wasn't doing nothing. So I had a lot to complain about. When you putting in work, it's always, I can't complain. Because there's nothing that you can complain about. You're always focused on the next thing. If you see yourself wanting something, your heart desires something in this world, in this life, just think about what you desire and then think about what you was thinking about 10 minutes ago. You was thinking about your ex. You was thinking about what happened yesterday. You was thinking about throwing something on a grip. You ain't even think about your desires. What you dwell on shall become your reality. But I guess I'll leave it there. Pass it back to Jordan.
Thank you, Moody. Hey, man, it's all good stuff that you said, though, bro. And people on the live are saying that they like what you're saying as well, bro. So I appreciate you for sharing that, man. I'm gonna go ahead and try to answer some questions real quick for the Zoom and for the live on Instagram, because my phone is on 10 now. Phone is on 10, so I'm gonna try to go ahead and get some questions answered out the Zoom first. Then I'm gonna pop back to the Instagram. If y'all on IG Live, but y'all not in the group chat, what you doing? You know what I'm saying? So we go ahead and hop to these questions. Let's get it. Do I put a stop loss immediate at the time of placing my order? No, I don't. Reason I don't do that is because I want to give my trade room to actually move, right? So I don't. I'm an options day trader. Typically, I'm trading off the 1 minute chart. I don't set an immediate stop loss because I also don't trade off of percentages. So I'll say this, I do have a stop loss, but it's a price-based stop. And so I'm looking at, hey, if I'm entering, if the stock's at 100, I think it's going to go to 105. If it breaks above 101, I'm getting in at a break of 101, a close of 101, or above 101. And then my stop loss might be, my stop loss is going to be whatever the other low was prior to that. So if we make a new low, right, we drop back down and go from 101 to 100 or to 99.5 maybe, right? That'll be my stop. So that's something you have to look at my class where I taught on trading on a 1 minute chart and see exactly how I break that down. What's a good percentage to risk account for beginners? I'm trying to figure out how to start looking at this word beginner. People think about beginner as, it can be beginner as you haven't taken many trades, beginner as you haven't been in the market a long time, because you can be in the market 30 days and be more advanced than somebody who's been in the market for a year, honestly. I'm talking about how you put in the work on it. So I'd say just regards to risking a percentage of your account per trade, I think it makes sense to not go more than 10% of your account per trade. You never know what's going to happen. You never know if your phone's going to die and you can't get out of trade, and then the Fed does something, the CEO of a stock does something, so or CEO of a company does something. So keep it small, no more than 10%, I would say, if I had to give an answer. When you're setting a stop loss on the chart, so some brokerages will allow you, I've heard of, to set a option stop based on the stock price. I don't remember who said that the brokers did. I don't remember that. What I do is I'll set an alert. So I use TradingView for my alerts. I'll just set an alert to let me know, hey, stock is dropping back below 99. That's your stop loss. Okay, cool. I'm gonna go ahead and exit. Or I'll do the trailing stop loss and actually have a stop market order placed on my brokerage that's going to go ahead and lock that in for me. Let me check my phone percentage, 4%. All right, 4%. We're going to try to go ahead and I'm going to try to stop the live in enough time to actually save it and post it. So I'm going through right now just some Zoom questions from Zoom that we're on my group chat right now. How do you determine bullish or bearish sentiment on each time frame? For example, hourly could be bearish, 15-minute could be bullish. Is there an indicator that can help you determine the sentiment? So you can use different indicators. You can use a MACD, for example, and see that there's an hourly bullish MACD, but a bearish 15-minute MACD, right? Depending on how long you're going to be in the trade, you're definitely going to want to trade in direction of the frame, right? So if we're scalping 1 minute chart, I don't care about a bearish 1 hour MACD, to be brutally honest with you. So I'm just scalping that intraday move. But most likely, I'm not going to be trading calls on something that's moving bearish. There's less upside potential for that. There's a bigger risk. My risk to reward will be much better trading in the overall direction of the higher time frame, right? But again, it depends on the time frame that you're looking at and how long you're going to be trading, right? So if you're swing trading, looking at something that's on the weekly chart or daily chart, those time frames matter more than something on the 1 minute chart, right? We're going to keep it rolling. More questions in the chat. What's the difference between a stop loss and a stop limit? A limit order is an order that once it hits the stop, then that order will become just kind of like a floating order, right? But a stop market order is going to immediately execute. Once it hits that stop, it's going to immediately execute at whatever market price is. So you might not always get filled at the exact same price. A limit order is going to make sure you get filled at the price you want to get filled at. What else suggests about setting stop losses based on stocks ATR and or support resistance levels? I've heard some people who use ATRs, average true range, for those who don't know, look it up if you're confused. I use support and resistance. I use higher highs, higher lows. I connect those, and that's how I use my stops. Somebody say, yeah, TD is where you can do that stop that's correlated to the stock price. We're gonna keep rolling through the questions that are in my group chat. So sorry to y'all on Instagram if I do not get to your question, because I'm trying to answer these group chat questions and my phone dies. Hop in the group chat. There's a good chance that Zoom gonna keep going once my phone dies too. Good afternoon. This video will be recorded. Yes, in the group chat, we do call out trades that we're taking on our personal accounts. We give the entries and we give the exits. What's my Discord group called? Martin Stock Club. Looks like a lot of people just shouting us out in the group at this point. Thanks for coming in, dropping gems on a Saturday, for sure. Drop gems every day. Thank you all for y'all supporting in the live on Instagram. Y'all catching the And but I'm gonna post it so y'all can go get these gems. I want y'all to get paid. It's too much money.
We had 8 days in a week. We'll have another week, a day for gems. I promise you that. We just have 7 days. You know, he only created 7 days. We've been trying to talk to him, but he hasn't got back to me yet.
That is true. We do have classes every day. So if it was 8 days in the week, we would have a class on the 8th day, and we would teach y'all on the 8th day so y'all can get some money. We suggest buying options in the longer expirations of weeklies. For day trading, weeklies. If you're swing trading, longer expirations, right? Longer expirations are going to be safer. They're going to be more costly, but you're going to be safer, and you can take a smaller loss if you do end up taking a loss. How long did it take me to react to what I see when I first started? My trading journey, let me check my phone. Phone on 1%. So this live is ending and getting posted. And share. All right, cool. We're gonna make sure that live get put out. Too much content right there to not get posted. So to answer the question on the Zoom, my trading journey is like kind of long. It's my 10th year in the market. Started out with 3 years of just strictly focusing on long-term investing. And I did 3 years while I was strictly focused on swing trading. I did, do the math, I think 3 years. Yeah, 3 years or 2.5 years where I was doing swing trading with options. And then this is my first year of fully day trading options. And I really hope this live gets posted to Instagram. I need to go find a charger. So that being said, held it to swing 3 weeks. Oh, that's all the questions on the Zoom. Boom. Cool. I'm gonna go try to charge my phone real quick. Oh.
I don't feel like typing it. D says, it's D. D says when reading candles on multiple time frame, what candles would you use to make trade decisions? Candlesticks. I know you use hollow candles, but I use candlesticks. And then higher or lower time, always higher time frames.
You're answering.
So to answer the questions, I use the candlesticks that I use. I know they have berries like Heiken Ashes, hollows. I use regular candlesticks, and then I also use higher time frames for higher probability setups, and I enter in on smaller time frames. You're welcome. You was in my class not this Thursday. I'm not sure if it was this Thursday. It was the past Thursday. How do you control How do you control your stop losses during a momentum candle? I'm more than positive if you go to the recordings, Jordan talked about stop losses a whole bunch of times, bro. And then on a momentum candle, how do you control your stop loss? It all depends, right? If you already put your stop loss in place, like that question is kind of broad, right? Because I will ask you a question first. When you jumped in that trade, did you have a stop loss? You can unmute yourself, Hugo's boss.
Oh yeah. So
yeah. And varies in different ways, but it all depends. Sorry. Jumped in a trade. Did you have a stop loss already?